Good afternoon, everyone. Mike and Corey here today with three exciting topics, talking about a little bit of the bounce back that happened after yesterday. It was definitely a down day in the red, and I know Corey and Steve talked about this yesterday. And then some good news from Louis Vuitton, which I don't think I own anything from them, but Corey's going to tell us all about it. And then something that I do know more about, which is cruise lines. And having gone on a couple cruises myself, uh, Royal Caribbean came out with great earnings, and all the cruise lines are moving accordingly. Plus, I'm looking outside at a bunch of snow, so I do want to talk about cruise lines. Before Corey gets started, must remind you this is a financial education presentation. You must do your own due diligence on everything that you hear in this presentation. More information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So Corey, take it away.
Yes, so starting off, yesterday we looked at the damage done out there, kind of the fallout from every time I say it, I want to say deep fake, but it is deep seek.
Deep sink.
Maybe it will turn out to be a deep fake, but for now it's just deep seek. So we're getting some unwind there. Whoops. Nvidia coming back strongly, up 6% today. Apple had that strength yesterday, carried over along with those other software names we talked about. And moving over, yesterday we saw some defensive momentum, people kind of putting their guard up, and that's all coming off today. So this is what we'd like to see in a bull market. We want to see the leaders continue to lead. We don't want to see consumer defensive companies hold too much of a rally. If we're really going to capture more of this bull market. So all healthy there. And, now eyes are going to be on earnings. Today, we got some interesting stuff. Boeing, GM. GM had solid earnings. The market wasn't rewarding the stock, but nothing out of the ordinary there in a bad way.
I
Um,
saw Boeing stock was up, so their earnings were very positive, or at least they
I
were
think
perceived.
Boeing was up because JetBlue was so bad, or I don't. JetBlue's down 25%, so I need to figure that one out. But this morning, Cisco down, Raytheon up. I mean, that's what you get during earnings season. And if you have a company of interest, then you go deeper from there. This afternoon, we get Starbucks and of course, Wednesday, really
Tesla.
big ASML in the morning.
Oh,
We get
Tesla.
Meta,
We get
Tesla, Microsoft. What'd you say, Mike?
wow. I say Tesla. That one'll move.
Oh, that one is gonna move. I don't doubt that. So then, yeah, Apple, um, Intel got a lot of big names this week. A lot of big names. So we'll be watching that. One from today that wasn't on that list is LVMH, the world's largest luxury group. One thing that's very interesting about LVMH is even during, and this is something uh, we've seen throughout history, but even during economic downturns, Louis Vuitton's revenue is very consistent. So that remained true. Obviously, we're not in an economic downturn right now, but they did have organic growth of 1%. And I couldn't even tell you all the brands that Louis Vuitton owns, and I probably couldn't even pronounce them either. But that doesn't change the fact that it's kind of business as usual for that global luxury giant. I don't know. Is the market
I
giving
was gonna
them?
I was gonna say, Corey, I'm pretty sure we hired you for your financial expertise and not your sense of fashion. I'm
Yeah,
just going out on a limb.
you would be right, my friend. You would be right. But we have seen some strength here recently. So the stock's holding up today. It was 650. This is the European price, but it was up nicely into earnings, and it's holding those gains. So all interesting, good, all good there. All right, Mike, back over to you.
Okay. since we talked about Louis Vuitton, which is luxury, which is consumer discretionary type funds, we'll hit into cruise lines. Clearly consumer discretionary. Cruise lines were nearly bankrupt during COVID. I remember looking at those stocks when we thought we would all never travel again. And every time they tried to take a cruise, COVID would break out and they'd all shut it all down. So those stocks were just horrible, but they did not go bankrupt, and they are back. And so I started off by I found this article. This is a month old, but I saw it and I thought, hey, here's the the example of discretionary. A cruise line is offering unlimited pass for 120,000, and you could pay in Bitcoin. So, which I thought was interesting that they would put that in there to draw people in. But this was Virgin Cruise Lines. Adults only cruise line 120,000 gets you a year of cruising. You get to bring a plus one, so you don't have to go by yourself. Includes like unlimited internet, things like that. So I thought that's pretty cool. I can't imagine ever being on a cruise line for more than a few weeks, but whoever bought these certainly experienced some luxury. With Royal Caribbean's earnings, they came out. Their stock is up 14% today. And here's the key things. Earnings per share, $10.94, a little bit better than $6.31 expected. So they killed their earnings. And then revenue, $16.4 billion over expectation of $13.9 billion. So what's happening is, during COVID, when these companies had to get very lean to even survive, and now with the economy doing much better, they're really taking off. Take a look at Royal Caribbean's chart. Here it is, trading their 52-week high. I'm probably, I'll pull it back to all time, probably, yeah, they're all time high. So wow, look at that. You can see the COVID dip where it went from $125 a share down to 20. So, painful drop there, but boy, if you had the courage, and then it dropped again in the inflation. But if you had the courage to buy cruise lines, then wow, I mean, it's up sixfold, and you would never think cruise lines would be up sixfold in 2 years, but it is. And then the last thing I wanted to show, not related to cruise lines, is just the 10-year bond, and just show the six months, so you can see the rate declining since the beginning or the middle of January. So this is good. This is good news to me. I mean, I see this is good news really to anybody that is buying a house or looking to refinance a house, that it's at least down some. It's nowhere near as low as I'd like to see it. This is not good news. If you are putting your money in your savings account and trying to get basically a very safe rate of return, the lower this goes, the lower those returns are going to go. So anyways, thought that was kind of good news. That's all I got today. I know with the earnings coming out the next 3 days, Tesla, Meta, Microsoft, Apple, we're going to be on calls talking about earnings. And just remember that earnings, I've seen enough of these when we have this big tech week. I want to say the last time I could think of like 5 stocks, and like 2 were up, 2 were down, and 1 was kind of right where we thought. These are just kind of like report cards on the way. Whatever the earnings are, it doesn't mean the whole company's failing, but you're going to see the market react. If they miss, it'll sell off. Let's just say 5%. It'll sell off. Those are usually buying opportunities. If you took a look at Meta last year, we had a buying opportunity about this time. Maybe it was in the April. But anyways, Corey and I will be back, maybe Steve as well, and we will talk to you all later.